All right, great. So, good evening, everyone. Welcome to this PANverzation on funding and investment for startups. Uh, this is, I have an idea what next, and we have with us Mr. Abhijeeth Naik. I'd like to introduce him to you. So, Abhijeeth Naik is currently the CFO of Amicus Capital Partners. Amicus Capital is a mid market growth private equity fund. Abhijeeth is the CFO and leads the finance, administration, and investor relations functions at Amicus Capital. He has around 20 years of experience in finance, operations management, private equity, and business leadership. Previously, he has held leadership positions at large companies like Zivame.com, Fossil India, Ocwen Financial Solutions, and ISG Novasoft Technologies. Abhijeeth is an active angel investor and has invested in startups across multiple sectors, including technology, logistics, esports, and crypto. He has also advised multiple startups on their operations, business plan, and fundraising. Abhijeeth is a chartered accountant and also has an executive certification in applied finance from the Indian Institute of Management, Kolkata. Great, Abhijeeth. Nice to have you with us. And we look forward to an interesting session on funding and investment for startups. Over to you, Abhijeeth.
Great. Thank you. Thanks a lot, Paniel, for having me. This subject is quite. I mean, I've been working on funding investments, over the last 5 to 6 years, and this, I can discuss in 15 minutes or 15 hours. So let's maybe just break it down into 2-3 parts, and then, I will cover each section, and then maybe if there are questions, we can always, tackle them. So if I have an idea, what do I do? Right? When do you get ideas? You can get an idea anywhere, right? Sitting in a park, or while driving, or even while sleeping, you can get all sorts of ideas, right? But then, is it a business idea? Right? That's what you need to kind of figure out. So the first question you basically ask yourself, if it's a commercial idea, right? What is the problem that my idea is going to solve, right? Is the problem a real problem currently, which is there, in the world, which I'm trying to solve, which actually warrants solution? What is the value proposition that I would want to bring? Let's be real. There are almost there isn't any product or service that hasn't been invented, right? It more or less being improvising on various things, right? Anyway, that should not discourage people, from checking out their ideas or building on their ideas, right? We don't need to really reinvent the wheel. A lot of startups have come up because they did not find the existing solution to a problem up to the mark, right? So they try and build. So once you have this thing that, okay, it is a real problem, you need to start thinking about the market, who your customers are, right? Who will use this product or who will use this service? What are the channels that you want to sell this or provide the service on? How much are you going to charge? How are you going to make money? All these things, you spend a lot of time. You need to spend a lot of time just thinking about all this. You're just getting an idea. You can't, you can't think that, okay, I'll start my business from tomorrow. I'll start making money. I'll start raising funds. It's a long process, right? Best thing is, once you start having ideas and you're little clear in your mind, start penning it down. Have a book separately for this. Start penning each and everything, however silly it is. Keep on writing it. You can always go back and refer what have been thinking, what are the various iterations. Next, so once you've done that, you need to validate whether your idea is good, marketable, commercially viable. For that, what do? You go to your near and dear, right? You talk to your friends, talk to your family, your close colleagues, mentors, teachers, whoever you think can give you a good perspective. Somebody who can give you a little bit of advice, or at least can understand what you're talking about, right? Don't be afraid, that whoever I talk to will steal my idea. It's fine. You just talk and get your idea out there and get as much feedback as possible. Based on the feedback, you can tweak your product or rework your product. The next step would be to start building a product. Right? This is where you have to decide, whether you're going to go full time into this business, full time into the startup, or you want to spend a part time doing this. Right? Um, like I said, don't assume that the moment you start building this product or service, you'll start making money in the next month. It doesn't work that way, right? And also, raising money is a long process. Right? Very few startups get funded at the idea stage itself. Right? Um, so once you have all of this, you should think about somebody who can complement you. Um, Say, for example, a co-founder, for example, a friend or a colleague or anybody whom you think who comes with complementary skills to help build this business. Right? Even at the time of fundraising, investors usually prefer businesses that is at least run by co-founders. Right? So once your product is ready, you make sure that you have your branding ready, name of the product, maybe a website, a logo. It helps to have a vision or a mission statement ready. At this stage, you should also start talking about incorporation of your business. Right? You talk to a CA or a financial professional who can help incorporate your legal entity. So that is very important, that you should have a legal entity. There are various options. You can have a proprietorship firm, you can have a partnership firm, a private limited company, various options. You should talk to your CA. I think before commercially starting anything, you should have the structure in place. The corporate structure at least should be in place. Why I think this is important to have is because, especially at a later stage, when you're raising funding, compliance becomes very important. Especially when the investors are doing the due diligence or testing whether everything is okay with the business. It's always good to have all these compliances in place. Next, I would say, would be your go-to market, or once you start selling your product. This is where you will realize whether the product has been, or product or service is accepted by the market. You will constantly getting feedback, which you can incorporate into your product or service to make it much better. Once there is a little bit of acceptance, that this product will work. You can grow. You realize that it has to scale up to the next level. That is where you'll need more money, right, or funding for that matter. Why do you need money? You need to make investments in the product development, or technology, the team building, various things. Example, right? This is where you start thinking of raising funds. Right? I always advise various entrepreneurs that try and build the business, without raising money, or try and raise money as late as possible in the journey. Right? Use your own funds, or use the funds generated out of the business itself. This is what we call, in our terms, called as bootstrap. This is where you basically use your own resources, own funding, make the business generate money, and then run it. Right? Why this is important, and this is where you basically learn how to manage with your existing resources. You would be a lot more careful spending your own money than spending anybody else's money. Right? So what are the types of funding which we have? There are various types. One is self-funding, one is debt, and then finally equity. Self-funding, we just discussed, using your own money and resources, getting the business to fund itself. This is obviously funding, right? You can, in your business itself, if your product is running, you're buying stuff from your vendors, you can negotiate for additional discounts, or a longer credit period. You can pay them a little later, trying to collect whatever your receivables a little faster, basically managing working capital. That's how you basically, it's called self-funding. Right? Next, people take debt. Right? They take loans. Right? It's what is a debt? It's basically taking a loan, either from a bank or any financial institution, where the cost is your interest, right? Banks don't really give you loans, um, I, because your business is very early, is not making money, not profitable, or you don't have enough net worth, for example, right? Um, so in our business, there is also something called as a venture debt. It's not as strict as banks, but it's a little more expensive because not only you pay interest, you also let go of a certain portion of your equity or share of the company. Finally, the equity funding, which according to me is the most expensive type of funding, where you take money to give away a portion of your company, right? Um, Even this funding, there are various stages where you raise money, right? The initial stages, you raise money from your friends or your family, or your close colleagues, right? They don't usually ask too many questions. If they believe in you, they believe in your vision, they can give you funding, right? And these are usually smaller checks, as I would like to. This is usually a smaller amount of money, a lot more people who are very close to you, and you initially you don't even need too much money to run your business, right? This is what we call as a pre-seed round, sowing the seeds. So that's a small, dip into the pool of your friends and family. Next is a slightly bigger type of funding. You probably reach out to your ex-boss or some high net worth friends, or who can write a slightly bigger check for you, right? This is what we call as a seed stage or angel angel investing stage, right? These check sizes can vary 5 to 10 lakhs to almost a crore, right? The next stage is where the business has a good traction. You want to scale a little bit faster. This is the stage where serious investors, right? Basically, venture capitalists, who can write bigger checks up to a few million dollars, right? Um, at the stage your business will get far more scrutinized. What we call checking your books is what we call as a due diligence. There are multiple types of due diligence that can happen, right? And at this is the stage where the value of the business gets set, right? This is what we in our parlance call as early stage or series A kind of funding. So at each stage of funding, your ownership in the business keeps on coming down, right? You keep on, it becomes lesser and lesser. Even though your value of the business might keep increasing, your ownership will, as and when you raise money, your ownership keeps coming down. This is what we call as the dilution of ownership, right? So that is also one of the reason I said to people, start raise money later on in the journey. That's because you kind of lesser dilute your ownership lesser, and at a later point in time at a higher value as well, right? This is better because you will have complete control of business. Next stage is, of course, the growth stage. What we call is what my fund also does, Amicus Capital. Next, after venture capitals comes the private equity. This is the bigger checks, the Series B, Series C rounds of funding. People who can write 10 million, 20 million, $30 million kinds of checks, right? And of course, it keeps on going. You have people who are buyout funds who basically buy out the entire company, 100, 200, $1 billion checks. You would have seen, a lot of news on the funding of late coming in the news, right? And the final, I think, is the ultimate stage is what I'm sure you have heard of this term, the initial IPO, initial public offering. You basically, till now, whatever you're running, all your equity is unlisted. The moment it becomes IPO, your company becomes public and your shares get listed and it gets traded on a daily basis. Until that time, you're an unlisted company. Your value doesn't change every day. Only when you're raising some Money is when your value changes. But when you're listed, you know how the market works, right? Trading. So that's basically about the entire funding stages and journey. I think one more thing which Pan you wanted to discuss is who is the right investor, right? How do I choose a right investor? You really can't choose a right investor, but of course you can have a say. In the initial stages, you obviously choose your friends, colleagues, or family, which is fine because they don't really trouble you much. But once you start raising more serious money, is when you will have to answer to all the investors, right? So you should choose an investor who basically would be your friend, would be a guide, would help you with the right connections, would give you the right advice, would berate you when you're going wrong, get yourself course corrected, and basically you, uh, increase the business or help you grow the business to the next stage. Right? Why do investors come in? Obviously, because they invest at a lower cost and they want to exit at a higher cost, thereby making a lot of money. So that's basically what I've been wanting to cover in this session. I'm happy to take any questions or any terms which you would like to understand.
Okay, thank you, Abhijeeth. Thank you very much. Yeah, we'll have questions now. I have a lot of questions, so yeah, let's start.
Sure. I'll try my best.
Okay. Abhijeeth, I mean, thank you so much. It was so clear. I mean, like, we've read books on this and we've been hearing about, things that we need to do when we have an idea and all these steps. And this is, I mean, this is a lot more clearer than books. You kept things very simple and to the point.
Right. Like I said, it can be in 15 minutes or it can be in 15 hours. So.
Yeah, so this is all we need to understand. So I'm building an agri-tech, startup.
Sure.
So it's 13 months. So I really don't have any questions on the process and things like that. I'm mostly in probably early stage now, right?
Mm-hmm.
Looking out for VCs. So I might need your advice in terms of what are the things that I need to look at, in order to scale it up.
Absolutely.
Right, things like that. This is more strategic discussion that I would want to have with you.
Sure.
If in case you have some time, I'll be more than happy to get connected to you and shoot out questions that I have.
Sure. Happy to.
Yeah, so great. Manjunath, you send me your email ID because I don't think I have your email ID. So, and let me know when you are ready with your questions. We'll fix up a separate session with Abhijeeth.
Absolutely, we can do that.
Okay, great. Any more questions?
Right now, right? So the other thing. So what happens? Like, I mean, your idea gets refined, like probably every month, every 3 months, or every 6 months. Like as in when you're meeting. Hello, am I audible?
Yes, I can hear you.
Right. So your idea gets refined every month. Probably that's not the right way. Every industry person you meet, right? Every person, your idea gets refined, right? Mm-hmm. So when do you think we should stop thinking about this?
Good question. So, like, too many cooks, you would have heard, right? Too many cooks spoil the broth. Once you are quite clear about your product, right? You can always fix the bells and whistles. But once you're clear about the product itself or your service, what problem you're solving, I don't think you need to do a lot of, unless you're course that the business is not working, this is not the way to go. That's when you pivot, right? But otherwise, you can every day keep on fixing various items in your business. But once you're fixed your product, your service, that's where it has to stop. You don't have to incorporate each and every suggestion of everybody whom you talk to.
Right. Yeah. So, I mean, I think the question is same. I should have put it in a different way. So what I meant is, for example, let's say you have an idea, right? You're working on it, you know the problem statement. But every time when you think about the problem statement, when you're trying to work on the short-term problems, and you know these problems are not going to be there for you know
Mhm.
too long,
Right.
and you have some problems that you can't fix it now,
Mhm.
right? That you can't fix it now.
Right.
You're also trying to refine your idea after every discussion, like after every person you talk to, you explain, and the person says, no, not this, that, in terms of product, in terms of strategies, in terms of things that we need to focus on, in terms of a lot of things, right?
Right.
So when you do this, you get into a confusion mode, like
Right.
you confusion mode as in for you to
Right.
like as in which one to look at now, right? And what I need to do. I
Right.
should I just stop?
Right. I think you rightly put it. No, you should figure out what to prioritize on. Right. Once your product is ready, let's take an example. Right. Just say your agri product is ready. Everybody whom you meet are asking you, when is your app coming out. Right.
Right,
Again, this is just an example. It
right,
may not be like a real life situation, but they'll ask you whether your app is coming out. Then you realize, okay, looks like majority of the people in I meet want an app, right?
mm,
So you start building that app, right?
mm,
Next, you let's say your Android app is ready, right?
mm,
Or at least 80% ready, right? And you
mm,
keep meeting people, they'll ask you, when is your iPhone app coming up, right?
mm, mm.
And that's where you sit back and figure out, okay, how many Android users are there in the country? How many
Mm,
iPhone users are there in the country?
mm,
Android 90%,
mm,
iPhone 10%. It is not your priority, right?
mm,
You solve the 80-20 rule, the bigger problem first, the
mm,
80%. So look to build the Android app first. So
mm.
that's you need to stop at various stages and think, okay, what is important for the business? iPhone app is good to have, but it might not increase my revenue multifold, right? It might
Okay,
increase by 10%. So I'm happy to shelve that project for a later stage.
okay, great. So another question that I have is, so I'm gonna need to decide my go to market. Like I need to strategize it. I have I have an idea, but I need to strategize it. When I say strategize it, basically I need to think about 3 years, 2 years, 5 years roadmap. So now when I think about it, so there are different ways that I can take, right? For example,
Mhm.
being a B2C startup, right? So I can directly be to the consumer,
Mhm.
directly be to the consumer, or I can also have a marketplace.
Mhm.
There are two different things that I can do. And in fact, there are many ways to go to market. But then now, so now if I'm talking to VCs, right, it's obviously I need to scale it up, right? I need to scale it up. I can't just take a baby step here, because the concept is proved and a lot of things working out. So then I need to like, so what are the parameters that I should look at right now?
I think first thing is you need to build your product, right?
Okay.
Like I said, don't expect just by an idea, right?
Okay.
Very few startups have come up or people have funded just an idea. Of course, they do. People do fund ideas as well, or pre-revenue companies, but it's very limited, right?
Right.
When you go to VCs, they will say, "I need show me revenue, and show
Right.
me what is your traction, show me how many
Right.
customers you have." Right? You have to build your product, even if it is 80%, 70%, 75% ready. It's fine. You
Right.
concentrate on building the product.
Yeah. Right now, what I have built is I've used Wix, which is a website builder. Then I've built a small website, and that is to just to make sure my concept is working and the people are perceiving it the way that I am thinking, and they just to understand the problem statement. And it has been happening from past 13 months, right? So there is good traction. Like I have good amount of customers. When I say good amount of customers, is to qualify the idea and understand the concept. Like I have about 60 customers, and there are about 30 customers who regularly come to me, and I've never thought of going to market right now because I'm also working for another organization right now. So it gets really difficult for me to manage both. So now when I know this is working, then I need to take it to a next level. To take it to a next level,
as long as you have the confidence, okay, that this is a sustainable business.
right?
Like I said, you should. Uh, this is the stage where you need to decide where I go full time, or I sit behind the sidelines and do it. Right? You have to take that leap of faith. Right?
Right.
Of course, you need to plan as well. I mean, if you should make sure that you have sufficient savings to fall back on if it doesn't work or it takes a longer time to come to fruition, right?
Right.
But you need to take the plunge at some time. Right? You can't just say, okay, I'll do my regular job. I'll just spend 2 hours on startup and then it'll give me billions of dollars of valuation. Doesn't work.
Yeah, so that's where I am. I mean, I'm more.
So I really don't know how to advise you on this, right? It is something which has to come from within, right? If you think it should work, you take the plunge and do it.
No, it's see, I'm damn sure about it. Like, I seriously, it's been 13 months and I'm not making any revenue out of it. It's only customers and customer feedbacks that's, making me feel. And I'm so restless about it. Every day in and out. I can't even imagine without this. So that's where I'm so confident about it. Just that my financial situations and other dependencies making me, do this job. At the same time,
that's unfortunately the call you have to take, right?
Yeah.
It's no consultant can give you that advice.
Right. Yeah.
Got it. Yeah. Go ahead.
Yeah. So I understood. I think I'll have to stop it here.
Yeah, we'll go in detail. Yes, out later on we can have
yeah. I'll have to stop here. Thank you so much.
Questions from others also. So Abhijeeth, are there consultants who can like guide you right from idea and maybe charge you some consultation fee or something like that? Who can talk to? I mean, like professionally advise you right from the beginning to the end, or not the end, but at least till you get the funding.
See, if one is, you should not have this thought process that I want to raise funding, right? That is not where you start. You start is, I want to make this work. I want to make this business work. I want to make my product, reach out to millions of people, right? At every stage, there are hundreds of consultants who can give you advice on various things. Like when you start, like the other gentleman was talking about, you have somebody to give you advice on technology, on how to build a website, on how to build a logo. You can't depend on somebody, to build an idea for you, right? That has to be yours. But whatever is on the side is what you need to build. You need to lay the foundation. Rest all you can build. You have, when you're building a house, you basically lay the foundation, and then you go to somebody for a door, you go to somebody for cement, you go to somebody for bricks, for the roof. That's how basically it works, right? You go advise if you want advice on financial planning, you go to a CA or a financial advisor. You need to figure out how I should draft my agreements. You go to a lawyer. You think this is the right stage for me to raise money. You go to an investment banker. Various things. A lot of options available out there.
Okay, and how long does it usually take on an average, to get the funding? I mean, like, say I have idea, I've started working on it, and I'm like, I bought the product is working well. So now I think, okay, now it's time for me to make more, to get in more money. So how long does it take if you approach a VC or something like that?
So
usually,
we discussed the various stages of funding, right? If you have decent traction, if you go to your friends and family, you will get money immediately, right? Or very, very less time it takes, right? Like I said, go to a lawyer, draft the agreement, take commitment from your friends, from me, and done. Your money is in the bank, right? As in when you keep moving that stage, it gets that much more difficult. Why? there are certain, especially in the early stage, after this friends and family, I'm talking about venture capitalists, is usually they do it quite fast, right? There have been people who have cut checks, morning has spoken on the phone, evening funding is given, right? Or also there are people like us, we our average funding period is almost 3 months, 3 to 4 months, right? That's because we are a little conservative, we do a lot of diligence. We check each and everything, start right from background verification of the founders to diligence of financial, tax, commercial, everything. So, and then if you just have an idea, go to an investor, you think, oh, this is a brilliant idea, I'll cut you a check within the next day. So it depends at various stages. But usually, I mean, if the model is not proven, you should target about 6 to 8 months to raise money.
And do VCs and all actually see a team as a good option, or even if you're a single person, they're okay with it? Usually, how does it work?
No, it's not a it's not a rule, but it's always preferable that you have more people who are working on the project. Like if you have a co-founder, it's very good because it's not depending on just one person. Who the other person can have different skill sets to build the product or the business. It's always good to have, but it's not mandatory. There are a lot of single founder startups.
Anybody has questions? Ramkrishna, CK. Okay, Santosh has a question. Which product would you suggest which can reach everyone?
Sorry, what?
Santosh, yeah. Which product would you suggest which can reach everyone?
Yeah, Abhijeeth.
Yes, Santosh.
Yeah, now with all your expertise and everything that you told, it's very crystal clear, about getting into the till the stage of IPO. That's very nice. Very nice explanation. Now, on just to take a suggestion from you, everyone is expert in some products. Everyone can, expert in, selling of that thing, this thing. But in general, what would you suggest? Which product can reach many of the, where we can cover the most of the customers?
Okay, you're asking me to give you the idea.
Yeah. Suggestion, not an idea.
Absolutely no clue, because if I had the idea, I would start it. So okay, well,
I have the idea. I'll contact you separately.
No, see, if I can see the many people, there's a lot of FMCG product which can reach every house, and a lot of consumables which can reach every house, which can reach every person, rather, which can reach every person. Now, do you have any idea of such kind where, where will be a lot of demand in the future also, and which we can think of it? Just a crazy idea which is coming up, I'm asking you.
I think health tech is a good thing to look at, right?
Definitely health tech. But of course, it is very much labor intensive. Not health tech per se, but health in general, especially home care or anything like that. A lot of people are getting into. Is of course is crypto. Everybody wants to do trading.
Oh, yeah. We need to do a session on crypto also. Yes.
Okay. I have. Sorry, go ahead.
Yeah. Anybody else? Questions? Nobody. Ramkrishna, you have any question?
So reaching customers, people is especially this digital world. Right now, every business needs to have a digital plan, right? And reaching or getting the customers to come to your website or come, you reach directly B2C is very expensive. To try and get people to come to your website and trade, very expensive. This is what we call in our parlance as customer acquisition cost. It is different for different businesses.
How much does it cost to make an app? I mean, starting price.
It depends how you want just an interactive app. you can get people to build it for you for a few lakhs. If you want commercially tradable kind of a website where people can come buy, that will obviously cost you a little more. But we have in the past for 5-6 lakhs have built a really good app.
Abhijeeth, any closing comments?
No, so I think if you have an idea, just try and work towards building it and making it a success, because there's a lot of value. There's we as a fund look at almost 1,000 businesses a year, funding around 1,000, especially from our, you can imagine the early stage ones. It's easily about 3,000, 4,000 a year, so almost 10-15 a day kind. So if you have an idea, just try and see if you can build it and
in this program, no, Shark Tank, for now it's come up in India. So there they calculate the valuation of the company. Somebody does that for you, right? Some consultants do it for you.
The value of the business.
Yeah, they say valuation. This is a new
valuation.
They say
valuation is nothing but the value of your business. How much, if you sell your business lock, stock and barrel, how much money will you get? That is basically the valuation. It's what is the value of that business, right? And valuing a business is not it's not a science. It's more like an art. There are various methods in which you can value a business. Each investor will have their own benchmarks on valuing a business. Usually it is your revenue multiplied by a certain factor. Say, for example, if you're doing 1 crore and let's say it is a tech product, you get a normal multiple would be say 8 or 10 times. So your value of the business is 10 crores. Just giving you a very high level example.
Okay, great. Thank you, Abhijeeth. Thank you very much. That was actually a lot of my doubts got cleared within that 15 minutes which you spoke. Things that I've been hearing from people, angels and all this. It was very clear. Thank you very much.
No.
Guys, thank you all for attending. And yes, crypto is one thing that we'll talk about later. That's also one confusing
I don't have too much of an idea, but yeah.
Or maybe you can suggest somebody who can
sure.
probably speak on that.